Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking at this hour.
EdTech is struggling, Byju's is struggling. Please wait 6 months.
Baiju Ravindran says the EdTech company is not far away from profits, claims the worst is over and the rebound will start in 6 months, admits to making mistakes but does not regret scaling up fast, plans to increase his stake in the company and puts an end to heavy spending on branding, says will not renew contracts with the Indian Cricket Board. That's an exclusive. Paytm's Vijay Shekhar Sharma says the company will get to profitability much earlier than the stated target of September 2023, but says profitability will not come at the cost of manpower or business verticals, rules out an international expansion, saying there's enough to do in India. The lesson from 2022 has been to never underestimate the power of a stray bullet. JSW Group Chairman Sajjan Jindal is actively considering manufacturing a high-quality electric car, says the push could happen in 3 months and his team is actively looking at states to set up a factory. Adds that funding is not an issue and JSW does not need a partner. That's another exclusive. Bank of America CEO Brian Moynihan expects a mild recession in the US by the end of the year. 73% of global CEOs expect growth to decline over the next 12 months. That's the most pessimistic outlook in over a decade, according to a PwC survey. The government is learned to be considering lower income tax rates for the rich under the new tax regime to make it more attractive. Sources say a final call will be taken by the Prime Minister's office. Another CNBC-TV18 exclusive, there's uncertainty over the longevity of incentives for electric vehicles. Government sources say the FAME subsidy scheme may not continue after the 1st of April next year. Adds that the government is also exploring extending subsidies only to EV companies with very high levels of localization. RBI floats a discussion paper proposing stricter rules on provisioning for loans. Banks must start providing for loans from the first sign of trouble and not after they have turned sour. The new rules may come into effect only after a couple of years, but PSU Bank shares sulk in trade, fearing a hit of profits. China's population shrinks for the first time in 62 years, leading experts to believe the country has entered an era of population contraction. Its GDP growth slows to a 47-year low of 3% in 2022. JP Nadda's tenure as BJP president is extended till the next general election end in 2024. Home Minister Amit Shah said that decision was unanimous. Union government officials meet the gaming industry representatives for consultation on draft online rules. Industry seeks list of do's and don'ts for self-regulatory organizations. Government says industry bodies can't double up as self-regulators. Well, let's go straight across to the day's trading action. A last-hour surge held the Lal Street end near the day's high. Nifty and Sensex gained 1% each, with Nifty heavyweights like Reliance, ICICI Bank and HDFC Twins seeing a sharp move higher in the last hour of trade. Mid-caps relatively underperformed the benchmarks, meanwhile. In the currency markets, the rupee weakened against the dollar for the second day in a row. It ended the day at 81.76 against the greenback. The weakness in the rupee was due to weak Asian peers, dollar buying, and dwindling upside momentum. And well, in the oil markets, crude prices remain mixed after China posted its weakest economic growth in nearly half a century. This despite the fact that its U-turn in COVID policy still supported hopes of a recovery in the country's fuel demand this year. Meanwhile, in a relief to oil producers and refiners, the government has reduced the windfall gains tax on domestically produced crude oil, exports of aviation turbine fuel and diesel. While the tax on crude has been reduced from 2,100 to 1,900 rupees per ton, tax on diesel exports has been cut from 6.5 rupees per litre to 5 rupees a litre. And similarly, windfall gains tax on exports of aviation turbine fuel has been slashed by rupee as well. Well, the big newsmaker from Davos now, Baiju Ravindran, has said that the EdTech company is not far away from profits. He claimed that the worst is over and that the rebound will start in 6 months' time. Speaking to Shireen Bhan on the sidelines of the World Economic Forum, Baiju Ravindran admitted to making mistakes, but he said that he does not regret scaling up fast. He also said that the plans to increase his stake and that he will be putting an end to expenditure on branding. Baiju's will also not extend the sponsorship contract with the Indian Cricket Board. Take a look.
Like initial years, it required a lot of branding initiatives. So we have capitalized on both cricket and Bollywood, which are two of the biggest religions in India.
And you're done?
We don't need to
cricket?
We're almost, like we are not planning to kind of renew that contract. So I think it's been an excellent partnership being in and around cricket. We have made mistakes, but there's always an intent to correct it. It's because at the end of the day, we are not building this to get an exit and make a lot of money. I never started this as a business. It ended up becoming one. We are still in that pursuit of how to make it better and better for students. Now, unfortunately, most of the happy students, I always tell that love is private and hate is public, and we've been on the receiving on that.
There's been a lot of conversation and a lot of talk around the fact that you're in the market to buy back. Is that true?
The team is right that in terms of increasing ownership, and that's aligned with how will you run something for next 20, 30 years. You need to have, it's not just about having contractual rights, like having more skin in the game than anyone else is important. If you are just building this for next 5 years, get an exit and do something else, maybe not, right? Like it's by increasing the ownership, it's not that I'm getting additional rights, but the team of increasing the ownership, I've been buying actually. If you see, we have increased our ownership by, over the last 12 months, we have only increased the ownership. And that's true. It's not just that, because like I'm not talking on my behalf, right? There is a large team of people who've been, like the 6 founding partners who started with me in 11 years have been there till now. It's a big responsibility. We're not that far away from achieving at group level profitability, because that's not been the focus for the last 2 years. If you take a look at our numbers, you will see that from 2015 to 2020, we have moved in the right direction. And then we made all these acquisitions, and a lot of these costs are one-time acquisition costs, apart from the revenue recognition change. And both made FY21 numbers, they look a lot worse than what actually it is, which you will see that the losses are getting almost halved in 22.
Not that far away from profitability, and how far away from an IPO? Because you decided to shelve those plans as well.
Like everyone else, it's like the IPO markets are shut right today. So we'll wait for the macro to improve before we look at the parent company IPO. We're exploring other options because we do have businesses within. As I mentioned, that it's not a single business, single market anymore. We have 6 strong businesses, all of them like our segment leaders, all but one are segment leaders.
What, IPO Akash?
So we are exploring all options. You will see some good news coming soon.
By when?
In the next 2-3 months.
In the next 2 to 3
You will see the announcement.
Okay. And is that the most likely option at this point in time?
We are exploring. We have not finalized.
What are some of the options that you're considering?
Like IPOing some of the subsidiaries which are IPO ready and are standalone businesses, we are exploring. Almost everyone whom you would have met 10 years back are still there. So it's a, like people say that you feel lonely at the top. I don't feel that way. It's been challenging, although I am not romanticizing the last 6 months, for sure. But the worst is over, and it's just a matter of time before. If people are thinking that the EdTech is struggling, Byju's is struggling, please wait 6 months.
Well, you can catch that full interview with Baiju Ravindran at 9:30 p.m. right here on CNBC-TV18. Well, from one newsmaker to another, Paytm's Vijay Shekhar Sharma says the company will get profitability much earlier than the stated target of September 2023. Speaking to Shireen Bhan at Davos, Sharma also added that profitability will not come at the cost of manpower or business verticals. When asked about the recent stake sale by Alibaba, Sharma said that Paytm top brass were not informed about it. He also ruled out an international expansion, saying there's enough to do in India. And when asked about the lesson from 2022, Sharma said, and I quote, "Never underestimate the power of a stray bullet."
definitely looking at free cash, profitability, very much visibility, and we have, like I said a number of times, that we have said that it is going to be far before than what we have said. But we are not looking at anywhere anything reducing because of that. So lucky to have a business line item that is growing so nicely, and lucky to have a business that addresses large profit pool, and hopefully lucky to become publicly announcing profitability sooner than what we.
What is sooner than what you
I
expect?
publicly quoted next September, meaning Q2 of next year, and we just are finishing like a last quarter of third quarter of this year. So sooner, what sooner can it be? Much before than that. Much
before September next year.
Yeah, that's what I'm trying to say. Alibaba, we as Paytm were never a strategic shareholder, or they were never a strategic shareholder for us. So Alibaba exit should have happened, or maybe would have been planned much better, etc., we could have said. But at the same point in time, it is what it is. Alibaba has paired, I think, half of their ownership in the company. But Alibaba and Paytm never worked together as a business model.
Are we looking at a full exit anytime soon?
They don't talk to us like that. And so we don't have any information. In fact, I want to share one of the very interesting surprise. We got to know it is Alibaba after the aftermarket.
Are you looking at global aspirations today?
I think there is so much to do in India that we are very clear that we are not going to do in the rest of the world. In my opinion, why should we waste our prime of our life on doing some other countries good when we have our life given to our country? I mean, I look at it as an opportunity, as a commercial, and I look at it as an opportunity for myself as giving back to our country. What is the only story in the world? I mean, I am going to put only story in the world. Why are we looking at it as a plus one? We are the one.
You started by telling me what 2022 has taught the company. It's grown from a teenager to becoming an adult. What is the year taught Vijay Shekhar Sharma, the entrepreneur, the individual?
Taught? Oh, never underestimate power of stray bullet or unknown. Because you can plan as much, you can plan even more, but there can always be a stray bullet that comes which you can never plan for, and there is always an unknown that can come in the story.
Well, you can catch that entire conversation with Vijay Shekhar Sharma at 10 p.m. right here on CNBC-TV18. Well, more newsmakers from Davos. The JSW Group is actively considering a big bet on electric vehicles. That's the word coming in from Group Chairman Sajjan Jindal. Speaking to Shireen Bhan, Jindal said that he's looking at states to set up a factory to make a high-end electric car. Jindal also added that funding is not a problem and that the JSW Group is also not looking to find a partner.
I believe that EV is the wave of the future for mobility, and you know, I gave up at that time thinking that all the auto majors would go in a big way in the EV, but you know, I realized that after 4 years of giving up the EV segment or giving up the idea of going into the EV, not much has happened in India. So therefore, I'm kind of contemplating to re-enter that phase.
Two-wheelers or cars?
No, it'll be a car, very high-quality car, because India, we don't have a high-quality EV right now, and the global majors are coming out with very quality EV cars, and therefore I believe that that's a segment, that's an area where JSW Group can play an interesting role.
Okay, so back on the table as an active consideration.
As of now, yes.
By when do you hope to finalize? Yes or no?
No, yes and no, I think next 3 months.
Oh, okay, as early as that.
Yeah.
What is holding you back?
No, not really. We are just studying the landscape, studying the technology, and looking at where we would like to build it, which part of India. So, yeah, so these are the things that is under discussion at the moment.
Okay, so if it goes through and you sign off on it, what is it going to mean in terms of ballpark investments? You said that you don't need necessarily a partner, but would it make sense to have a partner on board? Is that something that you may want to reconsider?
Not really. We have thought about it, and now the technology is readily available, so there is really no need to bring in any partner. And what I want to do is to bring in a product where we Indians can feel proud of, and we would like to export that product out of India. to European market and to the most developed market, auto market in the world.
Well, the Reserve Bank of India has issued a discussion paper proposing stricter rules on provisioning for loans. The paper proposes that banks must start providing loans when they sense the first sign of trouble and not after the loans have turned into non-performing assets. Former RBI Governor Raghuram Rajan told Shireen Ban that it was time for Indian banking regulations to match global standards.
If you've seen the RBI discussion paper that was put out only yesterday, but on getting Indian banks to move to a expected loss model, and the concern is whether that would mean that provisions move higher in the short term. Of course, this is only a discussion paper at this point in time, but this is what the US is already doing. Do you think that this is the right approach?
That is global practice. And I think in general, Indian regulators should move towards global practice, because that is what gives regulators elsewhere the confidence to treat Indian banks as they expand their global presence, to treat them on an equal footing with their own banks. I think India should expand financial services across the world, but it's very important, therefore, that Indian regulation come up to global standards as far as these norms go.
The Reserve Bank of India has also said that the likely reversal to the old pension scheme remains a major risk for many states. In its latest report on state finances, RBI has also said that reversal to old pension scheme will postpone current expenses of states to future, accumulating unfunded pension liabilities in the coming years. This after states like Chhattisgarh, Rajasthan and Punjab recently reverted to the old pension scheme. The government, meanwhile, is learned to be considering lower income tax rates for the rich under the new tax regime to make it more attractive. Sources tell us that a final call will be taken by the Prime Minister's office. Timsy Jaipuria now joins us with more details. Timsy.
Well, that's right. What sources are telling CNBC-TV18 is that the government may sweeten the new direct tax regime, which was announced in 2020, to push towards its early adoption. Finance Ministry is considering reducing tax rates at the higher slabs of the regime, which are currently at 30% and 25%. Also, Finance Ministry is in talks with PMO to push these reduced rates in the new direct tax regime, and a final call is yet to be taken. Just to give a backdrop, well, Economic Advisory Council's Vivek Debroy had pitched the need to shift to the new direct tax regime to the PM in November. Task Force report on simplification of direct taxes headed by Akhilesh Ranjan had pitched for lower tax rates and a fewer slabs, and also former Revenue Secretary Tarun Bajaj had told CNBC-TV18 that a complete rethink and reinvention of personal IT, that is the personal income tax regime, is needed, is actually the need of the hour, is what he said in his personal capacity and not as a Revenue Secretary. He also said that India must move to a single regime and not have two parallel regimes, that is the old regime and the new regime. So let's see whether government decides to bite this bullet this time, because last time also they were wanting to sweeten the deal, but they could not. So let's see whether Finance Minister Nirmala Sitharaman is all set to announce this relaxation in the upcoming budget on 1st of Feb. Back to you.
Right, Timsy, thanks a lot for that update. We're just a fortnight away now from perhaps an answer to that question. Moving ahead now, launched in 2019 for a period of 3 years, the second phase of the FAME, or Scheme for Faster Adoption of Manufacturing of Electric Vehicles, is set to expire on 31st of March 2024. Now, the scheme, with a 10,000 crore P outlay, has incentivized sales of 8.2 lakh vehicles so far. Now, while the industry is unanimous in the view that current levels of subsidies must continue till at least 2030, the government currently is not keen on continuing subsidies for a third time. Parikshit Luthra joins us with these exclusive details. Parikshit.
That's right. There is a question mark on whether incentives under faster adoption and manufacturing of electric vehicle scheme will continue after 31st March 2024. Sources tell CNBC-TV18 that the government currently does not see merit in extending subsidies under FAME for a third time or making a fresh allocation. The reason is that the government believes that the ACC PLI, PLIs for vehicles and components, and existing subsidies have already incentivized different aspects of the electric vehicle value chain. Sales of private electric cars have increased without incentives and are still increasing. One view is that if subsidies have to continue, then they should only be for R&D into advanced battery technologies apart from lithium-ion, such as sodium-ion, aluminium-ion and zinc-ion. Secondly, government is also exploring the possibility of keeping subsidies only for electric vehicles with very high levels of localization from 50% currently. That's why the phased manufacturing program may also change. Another reason why the government is not keen on extending subsidies is that the PLI scheme and battery swapping policies are set to bring down the overall vehicle cost. Officials also want the EV industry to take advantage of local cell manufacturing in India, which they feel will bring down the battery cost. But no final decision on extending or ending the famed subsidy scheme for a third time has been taken. Sources say a call will be taken in the second half of 2023.
Welcome back. Now you're watching India Business Hour. MeitY has extended the date for public comments on draft online gaming rules to January of 25th. Now in today's consultation, MeitY on draft online gaming rules, concerns raised by the gaming industry included grading of KYC and prescribing do's and don'ts for SROs. Ministry of Electronics and IT has been sharp on its toes when it comes to online gaming. Barely a week after being notified as the nodal ministry, we saw that the draft online gaming rules were put out in the public domain. They were welcomed largely by the industry as for the first time having a legal framework that governs this space. However, given that this is the first time that there is such a framework in place, there are various issues that the industry thought need to be red flagged towards the ministry. And towards that end, ministry today had a round of consultation with the industry to get a feedback as far as these draft rules are concerned.
Today it was the gaming industry who are by and large very welcoming of this framework. As you know, the most important thing that this rule achieves is to create a framework for what promises to be a very, very exciting, a very vibrant part of the digital economy vision that the Honorable Prime Minister has. So I think we've got a lot of consultation, with a lot of inputs.
Well, speaking of the industry, the mood was in fact largely upbeat, but for a few minor issues that were raised before the minister. One of the concerns that was raised is that perhaps the need for a graded KYC mechanism as far as the KYC norms introduced under the draft rules are concerned, number one. The other was some form of a regulatory framework regarding the SROs, and these were the two themes that emerged as a part of the industry feedback.
I don't think anybody is objecting to the idea of KYC, but maybe it can be a more graded process where maybe the initial is some sort of mobile OTP verification, for instance, and then you move on to a final full KYC.
Some of our peers raised a concern of ensuring that there's a protection of the game with respect to submitting to the SRO, so that the game as such doesn't get leaked to the larger audience, so that the game is protected and they can exploit the game. I mean, at the end of the day, if you make something, you would want to exploit the fruits of the content, right? So same as with any game developer as well. I think that was one. I think the other thing was around ensuring that there's adequate checks and balances amongst the SROs and creation of how we go about creating those SROs.
We're still some time away from having a legal framework in place. The public comments, the timeline has been extended till January 25th. Meanwhile, this is not the only aspect to watch out for. What the minister has assured is that even as a part of the Digital India Act going forward, there will be an omnibus regulator for the digital entities, including gaming companies, that will give more clarity on the way forward. In New Delhi, Ashmit Kumar. Well, the union budget is less than 2 weeks away now, and startups across the country are hoping for higher allocation. CNBC-TV18's Abhimanyu Sharma talks to founders of various startups on their budget wish list.
45 awards were given to startups across 17 sectors on occasion of the National Startup Awards 2022. Here is what the award-winning startups want from the government and the government's roadmap to promote emerging companies.
Government has given a scheme, so-called PLI scheme, for manufacturing the batteries. But as of now, there is no scheme which will give funds directly to the deep tech from the PLI scheme, probably because the PLI scheme has set some standards where you need to have 1 gigawatt-hour factory, and for which you need to have huge amount of funds. And then in that case only the big companies can take part. However, being a startup, there must be some of the part given to the out of PLI scheme given to the startups which are new in the market.
Right now, a lot of crop is being burned. Millions and millions of tons of waste is being burnt, and it can be seen in different parts of the country where the pollution is rising massively. I think the biggest problem which needs to be addressed right now, and which my company Infinita Biotech is addressing, is managing waste. We are helping developing enzymes where we turn waste into biofuels, thereby reducing import bills and bills of crude oil, and helping increasing the blending mandate, and in turn turning a waste which is a liability into an asset. From the budget point of view, I really feel that there should be a higher allocation on waste management on the biotechnology sector, because apart, of course, India is ranking very high in IT and different technology departments. But I think biotechnology is something where India has a huge scope in, and something companies like us require the support on. And I really feel that budget should be on the lines of managing agroeconomies and biotechnology sectors.
We have DPIIT has been in touch with all the stakeholders and all the relevant departments and ministries who have to take a call on these concessions. Really, as DPIIT, I'm not in a position to say what will be announced in the budget, but I'm hopeful that, as always, there'll be something exciting for the startups too.
Well, with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC-TV18.